Bitcoin community is witnessing a new conflict on social media platforms, particularly in America, as the US moves from being a strategic reserve for Bitcoin to one for digital assets. Since the Trump family now views it as a threat, this action has presented a significant risk to the Bitcoin community. 9 XRP ETFs are also being considered in the US. They are expected to contribute $8 billion to the XRP ledger. There could be a lot of enthusiasm and interest in the cryptocurrency market as a result. Individuals who buy traditional cryptocurrencies instead of exchange-traded funds, ETFs, might not know the difference between purchasing a cryptocurrency and a cryptocurrency-backed stock. XRP is probably going to be the primary component of the cryptocurrency payments that Bank of America is getting ready to implement. People must acknowledge that Bitcoin is not meant to be used as payment in any bank or financial institution. However, cryptocurrencies like XRP can be used to tokenize assets, store value, and make payments across walls on a single shared ledger. Although Bitcoin is acknowledged for its potential, its high transaction costs prevent it from being widely utilized in society. Transaction costs will continue to rise as mining subsidies are phased out, making access easier for banks and the wealthy. The typical person will have to use layer 2 networks, often known as custodial networks, because they might not have the funds to transact on Bitcoin. The XRP ledger was created by Bitcoin developers who were aware of this. And tokenizing it was one of the first uses of Bitcoin. It was the first blockchain that permitted tokenization and had a decentralized exchange, DX. Tokenizing Bitcoin and facilitating far more efficient with it was one of its initial use cases. In conclusion, the shift from a Bitcoin strategic reserve to a digital asset strategic reserve has resulted in a new fight among the Bitcoin community on social media platforms, particularly in the United States. The US is currently investigating the potential of using XRP to integrate cryptocurrency payments. It is important to remember, though, that this approach may remove some of the core concepts that set Bitcoin apart from other cryptocurrencies. It was a great success and is a 2-minute critique of Bitcoin and XRP Bitcoin. The speaker, St. Aller, is thrilled to work with the Cryptocurrency Task Group to undo the damage caused by the previous administration's misinterpretation of what is legal in the environment that is hostile to fraud and innovation. They also commend Stewart, the acting head of the U.S. Securities and Exchange Commission, SEC, for stating that the swore on crypto was misleading to fraud, unfavorable to innovation, and created confusion about what is acceptable. The speaker adds that as Mark's AA is most likely awaiting Paul Atkins' confirmation by Congress and his appointment as SEC chairman, they are not anticipated to render a decision in the Ripple issue. The speaker exhorts people to refute the lies spread by the malicious Bitcoin maxis with truth and to speak out against these liars. The speaker also discusses a video that went viral, which demonstrates that if Trump's intention is to purchase cryptocurrency and push it to extreme heights, the US would need a $756 trillion market capitalization for Bitcoin in order to sell $1 million worth of Bitcoin for $36 million each and pay off that $36 trillion in debt, and verified by a range of mental calculations and artificial intelligence. The speaker also discusses an important consideration that Elon Musk had to make when he launched X Money: whether to use cryptocurrency that is subject to capital gains taxes upon sale or cryptocurrency that is tax-free. American cryptocurrencies are shielded from capital gains by tax laws or pasito. Then by removing the need to monitor all those taxes, the no tax option will help both SaveX and the user. The author discusses the rise in popularity of stable currencies like RLUSD and low-cost RP, which are thought to be the most tightly regulated stablecoins globally. Elon Musk seems to be involved with the Trump administration, and it is likely that they will work with American companies. However, according to the author, Bitcoin is not American, and that Bitcoin enthusiasts wouldn't be responding with the same fervor as they do now. Additionally, according to the article, Eric Trump has stated that cryptocurrency projects based in the US, like XRP and Horror, would eventually enjoy a 0 capital gains tax, but those based outside the US would be subject to a 30% tax. Senator Ted Cruz plans to challenge the IRS rule requiring derivative brokers to provide user data using the Congressional Review Act. The rule's detractors contend that it violates the law and stifles innovation. Regarding privacy, Cruz's work may lead to changes in Bitcoin tax laws that would encourage innovation. The author also discusses the evolution of technology from Bitcoin to XRP and from Twitter to Uber. Additionally, they discuss the potential for more advantageous changes to Bitcoin tax laws. To creativity, the author also discusses the future of banking and the rise of online banking, pointing out that banks want a written declaration from the SEC stating that they would be at risk if they began integrating crypto assets. Max Avery believes that Agora, which is named after them, will be crucial to the project's success in terms of its payment system. He believes that the success of the project will depend on the XRP ledger, DAG, HBAR-XM, XTCA0, and ALGO. Among the most well-known businesses in the Single-Edge industry are Swift, IBM, PayPal, Coinbase, and BlackRock Circle. In conclusion, the author emphasizes the necessity of raising our standards and embracing innovation in the Bitcoin space. Because smart contracts can automate complex transactions and reduce errors, they are becoming more and more popular in supply chain financing. Take a long time to complete transactions. Traditional intermediaries like banks can be costly and time-consuming for small businesses. The goal of tokenizing treasuries that back stable currencies is to capitalize on the $30 trillion projected value of the US bond market. One significant issue with tokenized treasuries is that they can remove errors and save billions of dollars in assets. 6% of international transactions fail, and redoing them can be expensive and time-consuming. A new and better approach could potentially decrease some of these errors by automating complex transactions that previously required hundreds of intermediaries. The use of standard distribution, which offers true interoperability, will be restricted to those who meet strict regulatory requirements. This will be incorporated into the new financial web, which combines strict regulatory constraints with blockchain technology to offer real interoperability. When combined with conventional banking, blockchain technology will also offer a zero-tolerance approach. Security, which is shielded from online threats by several layers of protection, is another crucial area of study. It's not just about paying more quickly. It also involves creating previously impractical financial product formats. The money supply might be controlled by the central government. Nothing less is acceptable because the risks are too high. This industry receives innovation from private businesses, manage the amount of money in circulation. The future will depend on how smart contracts are developed and applied in many industries.